Today I want to spend some time talking about Amazon. We'll take a look at their Q2 earnings report that they released in August, as well as go over what analysts are expecting from their upcoming earnings announcement on October 31st. And we'll leave off the video by going over this article titled 5 Reasons to Buy Amazon Stock Like There's No Tomorrow. So if you enjoy this video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Amazon is a company that I've never owned any stock in across any of my portfolios. Even the YouTube portfolio, which right now is sitting at $54,084.69. Right now in this portfolio, I hold Alibaba, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. I also have a couple of dividend ETFs, SCHD, as well as VYM. These are larger positions within the portfolio, but as I've discussed before, I am looking to potentially sell out of one of these dividend ETFs in the future. And one of the potential companies that I could move money into would be Amazon. If I see them go on a dip, it's been a company that I've looked at over time many different times. However, the valuation has always been a little bit rich. And part of the reason for that is because Amazon really never goes on any major dips. Even after their last earnings announcement, the stock fell 13% in just a couple of trading days. However, quickly rebounded back up 12% in the next few weeks, and since then is actually trading now higher than where it was prior to the earnings announcement. Instead of Amazon's stock price dipping, what it tends to do is just trade sideways for a longer period of time. Since April, the stock is basically flat, only up around 0.25%. Over the past year, it's up 50% in total, with all of that coming from October till April of this year. And that's not to say that Amazon doesn't go on dips at all. Obviously, over 2022, the stock went down around 50%. However, during this time period, the market was incredibly weak. Companies like Meta were going down far more than what we saw from Amazon. And again, you can see even from 2020 through till 2022, the stock basically traded sideways, again, as they kind of tend to do when they get overvalued. Instead of the company going down, it just tends to trade sideways until its valuation catches up to it. Another even better way to improve valuation is by coming through and beating your numbers. That is a massive catalyst for a stock moving forward. So let's start by taking a look at Amazon's most recent earnings announcement back on August 1st of 2024. Last quarter, Amazon came through with a net sales increase of 10% year over year to $148 billion, with their North American segment sales increasing 9% year over year, international segment sales increasing 7% year over year, and AWS, which is one of their most important business segments, increasing 19% year over year to $26.3 billion. Amazon also saw their net income increase from $6.7 billion in 2023 to $13.5 billion in 2024. That is an EPS of $1.26 per share in 2024 compared to 65 cents in 2023. On top of that, free cash flow saw a huge increase as well, increasing to $53 billion for the trailing 12-month period compared to $7.9 billion for the trailing 12-month period ending in June of 2023. So overall, Amazon had a great second quarter, and Andy Jassy even pointed out that they're continuing to make progress across a number of different dimensions. But the most important seems to be AWS growth, as companies are looking to modernize their infrastructure, move to cloud, and start utilizing generative AI technology. And AWS appears to be the #1 player for a lot of these companies to look to utilize. However, despite a very solid earnings announcement, the stock still managed to fall 13%. And this just speaks to what can happen when a stock runs up very quickly, because as analysts start to increase their expectations around these earnings announcements, it means that the company has to continue performing at a very high level. And that can be difficult, especially over time, and especially as companies get larger and larger, like in Amazon's case. But let's take a look at this next quarter's earnings announcement. During the second quarter, they provided some guidance saying that net sales would be between $154 billion and $158.5 billion. That would be a growth rate of between 8 to 11% compared to 2023 numbers. And right now, analysts are expecting Amazon to put up numbers closer to the higher end of this range. Revenue estimates are sitting at $157.24 billion, with EPS estimates coming in at $1.14. Personally, I like looking at Yahoo Finance because you get a range of EPS estimates. And here there are 40 analysts covering this stock, so you're seeing a lot of different opinions around Amazon. They have an average EPS estimate that is consistent with that on Google of $1.14 of EPS, with low estimates coming in at 94 cents and high estimates of $1.28. All of these are above the EPS that Amazon put up a year ago of 86 cents. And surprisingly enough, Amazon is actually trading below the average price target. Right now, analysts have an average price target of $218.90. With a current price of $189.70, that's about 15% upside to the stock based off what analysts are expecting it to do over the course of the next year. There's even a high price target of $265. And honestly, Amazon's looking a little bit cheap right now. Their forward PE ratio is currently sitting at a 31.95, which is the lowest we have seen over the course of the last year and a half. And this honestly could be a good buying opportunity into Amazon because it is actually the lowest performing Meg 7 stock over the course of the last 5 years, only returning 110% compared to the rest of the stocks that have returned over 150%. And this article goes over some of the pros of Amazon, the first one being the reacceleration of AWS. Last quarter, like we mentioned, AWS grew 19% year over year. However, their operating margins expanded as well to 35.5%, up from 24.2% a year ago. Another reason that Amazon might be a good buy is because they're looking to improve their efficiencies around their e-commerce business. Andy Jassy has made this one of his clear targets to look for different ways to actually improve the margins on their e-commerce business, being their largest business. Obviously, this will have a big impact on both their top and bottom line numbers, especially their bottom line numbers. And one of the ways he's looking to do this is by implementing a regional system to actually lower delivery costs on packages. The third reason is around a side of Amazon's business that oftentimes gets forgotten. It is their advertising business, and it continues to grow at a very fast pace. And it really doesn't require a whole lot of work from Amazon to promote products and charge vendors a fee for doing that promotion. Because Amazon is such a large business, it becomes more and more difficult for it to grow. However, one of the ways they're trying to stimulate growth is by acquiring new companies. And this is number 4 on the list of reasons to potentially buy Amazon. They have done this over time, especially in the healthcare segment, by trying to get into the pharmacy industry, by knocking off players like CVS and Walgreens, by offering prescriptions that can be delivered directly to people. And number 5 reason to potentially buy Amazon is because they're looking to cut costs even more. This has again been a focus of Andy Jassy's. He is looking to increase the number of individuals for each manager by 15%. I've actually talked to an Amazon manager, and this is something that is actively going on. They are doing this as we speak. What this ultimately means is that managers will have more people that they will be required to manage, and this will just reduce the number of middle managers that Amazon really has to pay. There'll be a little bit different structure with how this kind of takes place, and it should reduce the costs to Amazon as a business. So personally, I'm going to be paying close attention to this earnings announcement. If the stock dips again in a major way, I could potentially be looking to get into the company. I doubt it's going back to the levels that we saw in 2022 where the stock dropped below $100 per share. However, if it were to drop anywhere close to maybe $150, I would potentially look to be a buyer. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, where do zombies live? Check the comments down below for the answer. Thanks for watching.